In this video, we're going to look at how do transactions affect the accounting equation. The equation layout I'm using is assets equal to owner's equity plus liabilities. So let's get started. Below you see transactions, and I'm going to transaction 1, where it says the owner started the business with $100,000 contribution. So you got to work out which accounts are involved. So when the owner starts the business, money is being put into a bank account. So we can either call the account cash at bank or bank. And why did he give us his money? Because it's his capital contribution. So I write transaction number 1, and the effect is that my assets will increase with 100,000. What is my reason? Because cash at bank or bank increased. It also affects owner's equity, and that increases with $100,000. Why? What's my reason? Because capital contribution. You could say owner's capital contribution. If we look at the second transaction, bought a delivery vehicle for the business. So we paid for it. So what happens to the money in the bank? Transaction number 2, I go, the effect is minus $40,000. My reason? Bank decrease. I bought a vehicle. Now, vehicle is also an asset. So what happens to assets? It increases with 40,000. And my reason? Vehicles increased. My equation is still equal because 40,000 minus 40,000 is 0. I have 0 on this side of the equation. Transaction 3, cash received for services rendered. So the business received cash. What happens with the money? They put it in the bank. So assets increase. My reason, cash at bank or bank increases. Now, what else does this affect? It affects owner's equity. So I go there plus 2,800. My reason, I write service revenue. Now, why do service revenue or any revenue affect owner's equity? Because the main reason of a business is to make a profit. The more revenue you get, the bigger the profit. To who does the profit go to? It goes to the owner. Transaction 5, paid monthly internet bill, $500. Internet bill is an expense. So how does this affect the equation? So we write in transaction 4, firstly we paid. So what happens to the money in the bank? It decreases. Now, expenses decreases the profit. To who does the profit go to? To the owner. So expenses decreases owner's equity. I write the minus $500 internet expense. By saying to me what is the expense and naming it as an expense shows me that you understand expenses decreases the profit. Profit goes to the owner, thus owner's equity involved. Transaction 5, the business took out a loan from ANZ Bank. So they got the money, they put it in their bank account, so my assets increase. Bank or cash at bank increases. Borrowing money creates a liability. A liability is when the business owes someone or some business and has to pay them back. So I go to liabilities and I say our liabilities has increased by 20,000. And what's my reason? Loan increased, or you could say loan ANZ Bank increased. Equation still equal, plus 20,000 equal to plus 20,000. Last transaction I break up into parts, and that's why I've done it in purple and in red. It says there, cash sales for the day, $4,400. In brackets, I've got there COGS, cost of goods sold. Some countries talk about cost of sales, 2,000. So let's see, how does this work? Transaction 6, I first look at the sales. Now I see the customer going into the shop, he gets to the cash register and he pays. So the business bank account will be richer by 4,400. Why? Because bank increased. The business will record this as sales, which is a revenue. So under owner's equity, I go sales revenue. Now think of it, there goes the customer. What happened to the business's inventories or trading stock? If you think of the shelves, it decreased. The stock is gone. So we have to show that on the accounting equation. Here we take the cost of goods sold, the cost of sales. What did those things cost us? So if you think of the shelves, inventories decrease. So the second part of this equation, we go assets decrease by 2,000. What is the reason? Inventories, which is an asset to the business, decreased. And then we go to owner's equity minus 2,000, and it's, what's my reason? Cost of goods sold expense. And that is a basic explanation of accounting equation.